Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi currency analyst, and today is Monday, July the 17th, 2017. Today we will look at the dollar yen, the euro dollar, the pound dollar, and the Aussie dollar. So let's start with the dollar yen pair. We can see here in the 4-hour chart, dollar yen fell to a 2-week low, 112.25 earlier today. That seems to have provided immediate support to the pair. We can see it tested that again soon after touching that low. It's currently trading at 112.42. Further down, we've got the 200 moving average at 111.70, while just above that we should get immediate resistance at the 112.90 level, followed by the 50 moving average at 113.40, and above that we have the previous peak from back in May of 113.68, and then above that we do have the 114 handle, followed by July's peak of 114.49. If you look at which direction the pair is most likely to go, it is a bit of a mixed picture because the MACD has fallen further into negative territory. We can see the MACD histogram is below the red signal line as well, in addition to being below zero, but we do see some positive momentum from the stochastic oscillators, which are currently trending up. So that could potentially be limiting the downside moves, and it explains why the price has been trading sideways since touching that 2-week low earlier today. If you look at in the daily chart, we can see it's a bit of a mixed picture. It's pretty much the consolidation we've seen since December is pretty much intact. We can see that there is resistance coming from this particular trend line at 112.90, and further down on the daily chart we see resistance at where the 50 and 200-day moving averages are just about crossing into each other at the moment at 111.90. RSI is neutral though, and that pretty much underlines the current medium-term picture for the pair, which is mostly neutral since December. Moving on to the euro dollar now, because we did see a fresh peak of 1.1489 on last Wednesday. That was in fact a new 14-month high for the pair. It's currently trading at 1.1464, so that's at around the 78.6% Fibonacci level of the down leg from 1.1489 to 1.1370. Further down we have the 61.8% Fibonacci level, which was also the prior peak back in June of 1.1445, while below that we do have the 38.2% Fibonacci level, which is just above the 50 period moving average at 1.1410. But if we do see further gains for the pair, we should see a key resistance area coming at the 161.8% Fibonacci level. That's at 1.1560. The short-term bias is still rather bullish. We can see that the RSI did cross back above 50 earlier today. It has weakened a little bit before trending back up again, but on the daily chart the momentum is much more decisively bullish. We can see that prices are still trading pretty much within that linear regression channel that's been in place since April. Prices are currently in the middle of the regression channel which also happens to be the last week's peak of 1.1489. At the top of the channel we have the 1.1670 level, and then after that the other key resistance that would come into scope would be the August 2059 1.1730. To the downside, we should get support from the 1.13 handle, but looking at the RSI, this current bullish momentum should continue. RSI hasn't reached overbought level yet on the daily chart. It did do that briefly at the end of June before falling back, but for the time being the medium-term outlook is still rather very bullish. Moving on to cable now, because the pair did touch a fresh near 10 months high, actually 1.3113. RSI is already into overbought territory already. It's currently it has its back though, although it's still just above the 70 level. So that means that the chance of further upside moves is rather limited. If you do see fresh gains, we would probably see a reversal coming soon afterwards. But the main resistance area to watch out for is the 161.8% Fibonacci level from the down leg from 1.3029 to 1.2810. So that 161.8% Fibonacci level is the 1.3165, around about that area. If the cable does continue drifting downwards, though, we should see support coming from the 78.6% Fibonacci at 1.2980, followed by the 61.8% level at 1.2945, and then we have the 50-period moving average at 1.2930. And below that we have the 200 moving average at 1.2845 before the July low of 1.2810. Looking at the daily chart for pound dollar, we can see RSI here hasn't quite reached oversold levels, so over the medium term, over perhaps the next couple of weeks, there's still a chance of further gains, but we should see resistance coming at the prior resistance and support level of 1.3230. If we do see pound dollar going down though, support should come from the 50-day moving average 1.2875, followed by the previous support level of 1.2770. And a quick look at the Aussie dollar now, because the pair did make a 15 months high earlier today of 0.7833. We can see that prices have been struggling to break above that level, though they've been trading very close to that high. We can see that immediate support is coming from the 161.8% Fibonacci level, from the down leg from 0.7711 to 0.7571. That level is the 0.78 handle. Lower down we do have the 61.8% Fibonacci levels of 0.7660, which is also the 50-day moving average, followed by the 200 period moving average of 0.7585. On the upside, well, the RSI is already into overbought territory. It's well above 70, so it is looking overstretched, but should we see more gains, we should get resistance coming from the 0.7940 area. That's the 261.8% Fibonacci level. But despite that strong bullish momentum, if we look at the daily chart, we can see that in fact prices have failed to break above the top of the current range. We can see the current range that's been in place since spring of 2016. At the top of the range, we've got the 0.7834 level, while at the bottom of the range is the 0.7144 level, and we can see that resistance came just below that level. Prices do need to break above this key level of 0.7834 before we can say that the pair has managed to break above its long-term neutral range. That's it from me. Thank you very much for watching and have a great day.